Hey folks, Zach here from Traders for a Cause. I'm thrilled to share the very first Traders for a Cause podcast with you. As is often the case with something new, we had a few technical issues, notably with the audio recording levels, and I do apologize for this. I promise to fix them as we continue this new venture. Aside from that, I'm very pleased with how my conversation with Mr. Nate Michaud went, and I want to personally thank you for taking the time to listen. Please enjoy. Hi, everybody. Welcome to the Traders for a Cause podcast. My name is Zach Shellhaus. I'm the executive director over at Traders for a Cause. This is our first episode, and bear with us because this is a learning curve for myself. But the gentleman that I have sitting at the other end of the screen here is definitely a seasoned professional at doing these interviews. So, Mr. Nate Michaud, how's it going, buddy?
Wonderful. How about you?
It's going. We're trying to get this thing off the ground and spread a little more attention, a little more love about Traders for a Cause and what it is that we do. So we thought it'd be a great outreach to have some of these meetings and ask a few questions and maybe have a little fun, joke around a little bit. So 2020 was an insane trading year. From what I'm seeing, every trader that I talk to is saying that it was absolutely nuts. What changed in 2020 that made it so different than any other year?
I would actually relate it to, if you think about the short weeks that we have, like when people are home, back in the day with July 4th week or Christmas week or around January 1st, more people are away from either college or their jobs, they're at home, and we start to have, if you remember, it's like we call it crack week, and
right.
All these runners just go nuts. But now everybody's at home every single day, so we literally have that every single week, and it's starting to compound over itself. So maybe it was March or whatever when COVID started to really kick it up a notch, and everybody started to stay home. You no longer have bosses over your shoulder. You don't have to hide your trading screens,
right?
And making your trades from your phone, whatever it may be, and you can actually try to at least start a career out.
Have a go at it. Yeah.
Yeah, and I mean that's essentially it. We used to have these condensed, 3 or 4 times per year, but now it's literally every single day.
Right. Well, as you know, I've taken a step back from, actively being on a trade desk to run the charity and everything. But I can't tell you how many of my friends have reached out to me just in the past couple months, just saying like, hey, I'm thinking about opening up an account and starting, trying to learn how to trade and everything. And I feel like it's one of those businesses where almost like photography, like you buy an expensive camera and all of a sudden you're a photographer, you open up a trading account and all of a sudden you can call yourself a trader. It's like, it's an old adage. I think a lot of that happened in 2020. I definitely can see that. So you kind of chalk it up to a lot of dumb money. Is that kind of a way to look at it?
Yeah, it's really, that since we hit bottom, we've literally gone straight up. So it's very hard to make a wrong move. Obviously, you can if you're on the short side, you're staying short and you're trying to step in front of stuff. But
sure,
majority of people that are just starting out, they probably don't even know what shorting is, right? So all you've had to do is buy and literally hold. And it's just been, like I said, compounding, because not only do they hold, but then you've got shorts coming in there because these moves don't make sense,
right?
And they're not selling,
right?
And then it takes on the next leg. So
right.
We're starting to have these. And in fact, when you were a little bit more active as well, you probably remember we had like the one and dones. You had that one big move one day, and you either got it or you didn't, and it was over.
Right.
And we just would be like, oh, I just wish we had that secondary move, that next level, because this could turn into such a good opportunity.
Right.
And that's exactly what's happening. They go up, they consolidate, and then they go again.
Right.
And it's offering just trades literally, dozens per day.
Right. Now, would you say that the bigger edge is on the short or the long side of these moves, or both?
I still obviously prefer shorting. I am more comfortable, higher conviction. However, I think I used probably 60 or 70% to the long side in the video that I did today when I was talking about it. So that's a big transition for me because typically I am mostly short biased. However, I've adapted, and kind of like I said, you got to embrace the chase, right? What used to be crazy to even think about joining a name that might be up 100 or 200%, or joining a name that literally has doubled again for a potential breakout. That is where the money is.
Right.
The short strategy, you just had to adapt. It's still the same old good types of all-day type fades. It's just you got to tweak it a little bit. It might be an extra hour or 2 hours that you have to wait. It might be an extra day. But as long as you are not fighting the trend and you're waiting for it, there's still plenty of opportunities. And the good part about it is the volume, the ability to get in and out and not have to really worry about liquidity is everybody's dream, right? Because there's nothing worse than having too much size and the liquidity dries up and you're stuck. So
I know that feeling very, very well.
You get positioned, you're like, all right, this is great, everything's going well. All of a sudden it's like, whoa, where's the volume go?
Yeah.
You move the market.
So how do we get out of this again?
So, that it's not really an issue as long as you behave. You still have to behave because, there's been a couple, even just in the last couple of weeks, you end up on the wrong side. All of a sudden it goes 5 or 10 points. You've got 30, 40, 50,000 shares. I mean, that's quick. That's a quick issue, real quick. And, and it happens. And I would say that the biggest change or the biggest thing to be aware of in this market is the circuit halts. And it's great when you're on the long side because, for most of us, it's hard to let those winners compound. You really always want to be patient, and things are going up and they're going up and going up. But when they start to circuit and go into the next circuit and the next circuit, it makes it a lot easier because, I just had to hold 3 circuit halts and I did it.
Right.
So that's a little bit of a game changer as well. Flip side, if you're on the short side, not so fun. So
not to mention if you're long.
What's that?
Not to mention if you're long and you get into a regulatory halt, then you have the opposite problem.
Exactly. We haven't had too many of those. I think maybe 1 or 2 this year. Most of the time it's on OTCs, things that are maybe, not fully up to filings, or they're doing some type of merger, but they keep on pushing it out and out and out and out.
Sure.
Things like that, when they're shells, you want to be cautious of. But
of course.
For the most part, there hasn't been too many of those, and there hasn't been, there's been offerings, which, that's another game changer from prior years where, you used to short and anticipate potential offerings based on, financials and going through, digging. Not happening this year. The offerings are bought.
Right.
The offerings are literally traps, and then they just keep on going.
Crazy. Have you noticed the same thing with IPOs?
IPOs I haven't paid as much attention to this year. Obviously, there's some, you like the Airbnbs, the Dash, but it hasn't been as big of a focal point for me. I would say SPACs for sure, which is kind of the new way of IPOing. Instead of going through that, long drawn out process of, filing, and then 6 months later, a year later, you finally, go public.
Right.
You literally can go public tomorrow with a SPAC. So
right.
It's typically a pretty bad deal. It's not the best structure, but you know what? People don't care right now, and it's working. So
sure.
It'll be interesting to see what happens in a year or 2 when all these things come. It all comes in. But
sure.
For now, we just have to embrace it.
So one thing that kind of like caught my attention in this market, again, it's hard to even stay away from it or ignore it, is this whole GameStop fiasco. And I feel like anybody who is not a trader became interested in the markets because of this.
Yeah.
For me, for you guys that have been around this a long time, I was looking at it and thinking, okay, I mean, it's obviously a big move, but it's a short squeeze. And I used to see these, 10 or 12 times a year, like it was no shocker. What was it about the GME move, aside from the obvious, which is that Reddit drew attention to it? What was it that captured everybody's attention and drew? Do you think it's just everybody learning about what short selling is, like the masses?
Yeah, there wasn't. I mean, there's always been short squeezes, like you said, but this one felt like it was almost like a movement of people getting together. You know, and us versus them. We're taking out the big money, and you know, they ended up getting beat down, right?
Of course.
And you know, and who knows who was behind Reddit? Who knows, you know, any of that? But it did feel different just because it felt like a full movement. It felt like people were doing the right thing to them, not to us. But and you know, I had conversations where people were literally mad at the suits, at the hedge funds. You know, so they've been making all the money. It's time for us to get back. I'm like, all right, you do that. But I'm telling you that, you know, when this comes in, it's going to come in. It's going to come in hard. So best of luck, but I don't think it's a good strategy. You're talking about one or two hedge funds that are blowing up, and
right.
Once that demand from their cover, or once they unwind that position, what next? You know, you're still buying into a company that was borderline bankrupt, you know, just a year ago. So, I mean, good luck. It was a bigger movement, I would say, you know, than Bitcoin, right? So if you go back, 2 or 3 years, I think about 3 years to like Thanksgiving, you know, you could not, back when we could have Thanksgiving and things, but you could not walk around your house if you had, you know, your family over without talking about it at least, you know, 3 or 4 times with different people.
Sure.
And, you know, I felt like that was the craziest movement. Like, wow, everybody's talking about it.
Right.
GameStop was like 10x, 20x that. I mean, I get texts from friends that I haven't talked to.
Just some people that know that you're involved with stocks somehow. What do you make of this?
I made a joke about it, but it's like nice catching up with you. I haven't talked to you since high school, but yeah, it's been great.
I had a friend who's he's like a biotech guy, but he works in a lab, and he told me that he opened up a trading account, and he was like, "What do you make of this whole GME stuff?" And I'm like, I reserve all my opinion on that, you know. Good. He's like, well, I didn't buy any GME, but I did buy some AMC. And I looked at the next day, it was down 30%. I'm like, oh God, face palm.
Buy the cheaper alternative. They're still going to lose all their value. Yeah.
Brutal, man. It's insane. I've never seen so many people with absolutely no connection to the industry. Just their imaginations just ran wild with it.
Yeah. At least AMC took a little advantage of it. They raised capital, but I guess GameStop was, you know, afraid of regulatory scrutiny and just, you know, was like hands off. And they had that opportunity to raise billions.
Right. Oh yeah.
And they didn't. And you know, I think that's crazy.
They could have started the next Nintendo.
Literally.
For sure.
But, you know, AMC still is going to need more money eventually, but, you know, at least they used that. They did I forget if they did just the ATM. I think they did an ATM plus something else after, but, you know, they looked at all avenues to be able to say, hey, you know, why not? Like, it's about staying in business at this point. So, but it is interesting because that movement probably did save AMC from bankruptcy. Literally.
What do you think it was? And if you don't know the answer to this, you know, you can certainly pass on it. But what do you think, fundamentally speaking, is the reason why Wall Street Bets decided to pick GME of all?
It was mostly because of the short interest, and I vaguely remember it being like 250% or so, like last year, and then it was slowly starting to kind of unwind to maybe like 170, 150, and I think when this whole thing started, it was around 150. So. It might still be over 100, which is interesting in itself. You know, how can you short more than the float? And you know, that's an interesting thing that I kind of looked into, because, you know, if you think about when we short a stock, right, somebody's buying that, but then that gives the ability for that broker, whomever just purchased the stock from your short, to then loan that out, and it's just a continual trend of like, where did all these shares come from?
Right.
And that's interesting. That's interesting to me. And you know, I had always wondered, you know, on some of these 1 or 2 million share floats, like, well, what happens if somebody owns 2 million shares and there's really only 1 million out there? Like, how does that unwind? What happens? You know,
Right,
there's been rivers and all that kind of stuff. So
sure,
it was actually interesting to see that play out. But maybe we'll see it happen on a 1 million share float one.
perhaps that's the next time. So, all right, let's shift gears a little bit. So, you know, trading for you has been multifaceted in that you have a service that you're running and you've been running for many years now, in addition to trading. And obviously the trading income has been, you know, pretty outstanding. When it comes to your service and building Investors Underground and maintaining it, like when the money is so good in trading itself, what's driving you? Like what is making, like I guess we could put this into multi-part question. What drives your wanting to grow IU, and what's next for IU? Like where do you see it in the future? Where is it going?
That's like a confusing issue that I'm working through right now, right? It's been like the most interesting last 12 months. I mean, first off, you know, I'm passionate about, you know, the whole community. I'm passionate about helping others. I get more excited, even my best day ever. I'm more excited seeing the guy that may had his first 6-figure day or his first $10,000 day. Like that's more exciting than having my best day ever.
Sure.
Which is also the sad part about trading, right? Is our higher highs are always a little bit lower,
yeah,
but our lows are always still like the worst.
Yeah.
That's the best part about trading. No, but you know, it is confusing. I have an incredible team, you know, around me, and if I didn't have that, you know, IU wouldn't be around because I just can't do it. I am, you know, for those of you guys that know me or see me, you know, I'm all in all day trading, and that's where my focus is. That's what I'm passionate about. But you know, I've got a partner, Cam, that does also trade, but his passion is building a business and making that business grow and things like that. I've got Josh and I've got Max, as well as many others, but they're all traders to some degree. I've met them all within, but they all have their own strengths and their own passions in other places. So that's really what allows us to do what we do. And what I tell people is, you know, if we didn't have this, then there's nothing else like it. So, you know, where would I get the information? Where would I get the team? Where would I trade with veterans that, you know, are all kind of, you know, identifying market opportunities? So,
of course.
That's why I do what I do. That's why we do it. You know, I don't see anything happening in the next, you know, short while, but it is like I said, it's a very confusing time because, you know, I've hit all numbers that I ever, you know, thought that I would, you know, get to. And, you know, the problem is that I've said many times is when you get there, then all of a sudden, you know, your next target is double.
What's next? Yeah, sure.
And so how long does that go on? And am I going to be doing that at 40, 50, 60, 70? And I'm going to look back and say, well, I should have been good with that.
Yeah. How much is enough?
Exactly. And so I those questions, I've had conversations with people that are just insanely better than me about, you know, what does it take to get to the next level? And one of those things is really, you know, I've done a lot more position trading and taking on more size and letting things work and carrying stuff overnight. But in order to really get to that next level and that next huge level, it involves a lot of overnight, big picture, big size swings.
Right.
And I don't know if that's for me. So that's what I've been kind of going back and forth with. That's what I've been trying to kind of determine. Like I'm in the best place that I've been, you know, in physically, emotionally, psychologically, like everything is good. So why would I want to screw that up? Why do I keep pushing and pushing and pushing?
Right. Why throw a wrench in it?
Yeah. So, I mean, it's a confusing time, and that's what I'm going through right now to try to figure that out. It's a good problem to have.
For sure.
But, you know, I don't foresee anything changing in the near term because this is always going to be my passion. It's just For me, it's about finding the right people that could maybe broaden the scope of what we have and offer, some value. I've been trying to add different people to do different webinars and things like that, so that it's not just, central or, focused on one person. I've always tried to expand it, but the problem is people are excited about it, and then they start trading exceptionally well, and then it's not as important to them. So
right.
It's always a tough thing to do, but you got to find your right people, and if and when you do, you just got to roll with it, take care of them, and make sure they're happy.
So I think about one of your speeches, notably, I think it was in 2017 when we went to the Market Rebellion, the John and Pete's conference in Vegas. One of the first things that you said in your speech was talking about, if you're always thinking about the next Rolex or the next sports car, and that's what really drives you, then just stop because it's not going to end well.
Yeah.
So why don't you talk about what seriously drives you? I know a lot of you guys just love the art of trading, just the act of trading. Like it's just,
right.
You get high on it. But other guys really are motivated strictly financially by the money. What drives Nate to get better and better every day?
I have a Garmin, by the way. No Rolex, but just a Garmin.
It's an Apple Watch.
But no, it's not perfecting, but making process better and better. Making it more streamlined, finding a better way every single time. And when that all comes together, the results, speak for themselves. So it should be expected. If you have a good process, it should be expected. So the better you can make things, the better you can fine tune things around you, automate things as much as you can. Always finding the next thing or the next edge is, motivating to me. But as far as like the not the Rolexes and the cars and stuff, I think the most important part about that is, I've not that I've had millions of sports cars or anything like that, but I think that once you get there, once you do that kind of stuff, it's cool for like 6 months or a year, but then you realize like, what's the point? Like,
what's next? Yeah.
Yeah. You might as well like focus on things that matter. And for everybody, that's different. You've got the bachelor lifestyle where that could, be a focal point for you. However, once you start to, have kids, in my case, it starts to become more important to think back to your childhood. What was fun for you? What was the memories that you still remember today? And for me, my grandmother was fortunate that she was cutting hair and was her own businesswoman, bought beachfront for like $17,000
yeah.
when my grandfather was in the war, and he was sending money back.
This is Pepe.
Yeah, Mehmet.
Nice.
Because of that, those choices that she made, that early, we were able to have our summers, 2 weeks a year on the beach, and those are some of my best times.
Right.
And so that kind of came full circle where we, ended up getting a place near the beach. And so
you think about your kids. Sure.
What's that?
You think about your kids the same way.
And acquiring spots that are going to create memory, spots for people to come, visit and things like that, where, you beach and lake and your home, wherever it may be, it's things that you do stuff, even like a mountain condo for skiing, things like that.
Sure.
And those are always going to be good investments. And, the thing about it is, you can either have cash in your bank or, cash in property. And the properties that I've acquired or the properties that I've looked at have all gone up so much. It would have been better just to buy them all.
Right.
Than have the cash in the bank account.
Sure.
So that's kind of why or where my focus is and what, my passion is just, investing in potential memories later on, because, think back to your childhood, what was important, what was, what do you remember today? And if you can do that for your kids, next generation, whatever, then, what's better than that?
That's a very good way of looking at it, because I think that in the end, all we have are memories. You know what I mean? Like he who dies with
you work hard and you play hard. So
sure.
I literally can work hard and walk outside, walk down and go jump in the ocean or whatever the case may be. But
sure.
like you're there. You're already there. You don't have to drive there. You don't have to go and spend a weekend and do a hotel and stuff. It's, use your money wisely.
Of course. He who dies with the most toys still dies. as the old adage would go. All right. Why don't you tell me about, we know a lot of the same people and we're part of the same circle now for almost 11 years, 10 years, something like that. Talk about the 3 people in your career that have had the greatest impact on what it is that you do and what drives you.
Should have asked you for the questions ahead of time.
That would make it too easy, right? You could start with one. Just think of one that really sticks out and tell me how they impacted what you do.
I think that there's a couple people that are would go unnamed, and I know you know who they are, but they are kind of under the radar type. They've chosen to take the non-social media route.
Right.
So if I were to describe 2 of those individuals, and then I'll get to some other names. But what I've took from that is just always focus on the process, focus on risk management. It's like a car engine. It's like a machine. There's things are going to break, but you've got to change the oil. You've got to keep on figuring out how to make sure that it's running smoothly. And as long as you take care of it, as long as you're always fixing those leaks and taking care of things, it's going to run for a very, very long time. So I think that that's a key takeaway from one of those individuals. Another one is, always adjusting that dial, and you guys can figure that out of who that was for who went to Traders for a Cause. I was on a panel. Somebody was explaining, you always got to just recheck in with risk. You got to recheck in, am I sized in too much? Am I, is it doing what I expected? Do I have too much risk on? Should I risk down? Is it doing exactly what I thought? And I should be, cranking it up.
Yeah.
And, that was a really good key takeaway for me. But other people, most of the people that Phil and Greg, and, the thing is, you just take a little bit from everybody.
Of course.
Eric, who, a lot of times would credit me with things. One of the biggest takeaways from him is that next mentality. Like, screw it. You screwed up. Like, reset, refocus, come back the next day and go. And That was something that I always, admired about him, because, I'd get, smoked. And the next day I'd be like, all right, 1,000 shares, and like day before I'm trading 50 or 100,000, but I'm like, all right, 1,000. And you just don't do that. It's you just have to reset and get right back. You have to look at how far you've come. You have to look at, look at the big picture. And if that big picture is doing this, then just believe in yourself and go. And that's what I took away from, somebody like Eric. You've got, Phil. One thing that I talked about in the last interview was, I used to wait for this perfect setup, and I was waiting for the stock to go up and then, gap up the next day, open a lot higher, and then potentially fade it. But it opened red. So I'm like, all right, off radar. But if you just wanted to go up a little bit and you thought it was going to pull back 5 points, why are you taking it off radar if it's down a point? There's still $4 of downside. So that was something that I saw just by watching, like, okay, this guy, doesn't take it off radar, even though it didn't do, the perfect setup.
Right.
And there's still a lot of meat on the bone. So,
of course.
Things like that, you're learning every single day. And you could be learning and influenced by people that you don't even know, just by silly quotes, silly takeaways that somebody says. You're like, that makes sense. It's that one little key takeaway. So there's just so many people that I could list off, but it's about building that trading arsenal and just take a little bit about from everybody. Greg used to give me crap for wiring out all the time. And that was a situation for me where I literally use every square inch of my account, and that's just I'm an aggressive trader. If I have buying power, I use it, and that was my kind of way of controlling risk. And for me at that time, that's what worked for me. But since then, probably about a year or two after that, I started to let things grow. It's been quite the journey. He was right, in the end, but I just wasn't there and I didn't understand that yet. And, so that's a great example of, it might not make sense today, but at some point, once you cross that path, that bridge, that whatever, it's gonna be like, this is what he was talking about.
Right.
So, it's always good to just have those key takeaways from all these different other people. So and then the other part about that is just surrounding yourself too with I've got a couple people that also like to just kind of chill under the radar, but you surround yourself with people that are smarter than you,
for sure,
and make sure that you bring something, and you should always be at the forefront, offer what you can, go that extra mile and help these other people out. So that when you're asking the dumb questions, it's not always that you're just taking, right? So
karma, baby.
You want to bring what you can. What's that?
It's karma.
Yeah, exactly. And so make sure you find your team. You can't do it all, but you can definitely find people that need you and that you need them.
Oh, for sure. For sure. So I heard in one of your recent interviews, I heard you say something that I never thought I would hear out of your mouth, and that is that you are starting to become a more fundamental oriented trader. Is there truth to that statement?
In 2019, now you just have to throw away everything. No, I mean, yes, you have to, and that's also from basically reverse engineering everything that you've got screwed on in the past. Like, okay, now I know why they were short biased. Going back, looking at the why, it's a very important part of if you're planning on trading something, and especially once you start to use more size, there's nothing worse than ending up in a situation where you're down 30 or 50%, on a filing.
Oh yeah.
So, I like to know what I'm up against, what the potential is, and then I can make a decision from there. If I know that the risk is there, but I feel strongly about the current market we're in, the current environment, that this could potentially be a squeezer that goes 100, 200%, but there's that small chance that they raise.
Mm-hmm.
I like to know that, and I might end up taking less size, thinking bigger picture, things like that. But yeah, I always look. It's one of my strategies is related to particular filings, and when there might be increased supply and things like that. It's been a pretty big game changer as far as having conviction and patience on particular trades. So I don't dive in and look at every time how much cash is left and how their last quarters were, their balance sheet, all that stuff. No, I'm not. I don't get super aggressive for that, but I am familiar with it, and for the most part I just want to see what I'm up against and what potentially could come out that would aid in the fade.
I find, I always found this because I used to do research all the time, that when you're opening up these filings, they are purposefully written to be confusing and to be as confusing as possible, oftentimes to hide issues. But the ongoing question was always, okay, we understand what this means, but what does it mean in relation to the trade?
Right.
You need to distill it down. You need to figure out okay, this doesn't look great, but what does it actually mean to my thesis? How does it actually affect how I'm going to place this trade? Right. And I think that's what ultimately separates, fundamentally speaking, like the men from the boys when it comes to fundamental trading, is knowing how to interpret.
You have to understand. You have to understand, like, if there's abnormal volume, what is it tracking for? Does what you're reading even matter if it's going to trade 300 million shares on the day? Things like that all play into things that could potentially help you determine a bias for a particular trade.
Right on. Makes a lot of sense. So, 2020 was insane. 2021 has already started off insane. The markets are always changing. The name of the game, you hear it over and over again in every interview, is being able to adapt to the market conditions and to be able to trade as well in a bear market as you do in a bull market.
Yep.
As somebody who has a lot of educational materials, like, IU videos that you've done in the past, do you ever feel or do you ever fear that any of that material will lose its ability to be evergreen in rapidly changing and evolving markets? Or do you feel like it's mostly, good for the
foundation, right? It comes down to having that foundation, and you're without that proper foundation, you're not going to have success in all markets anyway. So it's all, comes down to risk management, different types of setups, what these setups mean, how would I potentially react in certain situations, and really how you can expand from that. So in my eyes, it's the base foundation. I still do pretty much everything that is in them. Obviously, I've expanded. Back in the day, I did not use VWAP. Now I do. I think that it's a big tool. Some of the ways that I've been trading now, waiting for what I would call like post-exhaustion, right? Normally, we might try to not necessarily find the top, but scale into a trade that's trending up, but that could be an account breaker, in this market. So for me, really understanding that the higher these things go, the more meat is going to be on the backside. So there's really no reason for you to try to find the top. I'd rather be 50 cents of late than $2, $3, or $5 too early. So I think that it all comes down to having that base process and then just expanding your playbook from there. So I'd love to do another educational video
series
today, and I'd love to. I would love to there's just so much more, but it's just not worth. There's
right.
just not enough time in the day.
Right.
I can't make sense of doing something like that when the market is as good as it is.
It's not a good use of time.
Yeah, but I mean, there's just so much that you can. And I try to on the Sunday scans and things like that. I try to share some of that stuff that can give people a base to at least I'm gonna look into that and then see if that helps. But at some point, maybe one day, I'd love to I'd love to do different, like what you're doing, interviews, pull out these different tidbits from everybody.
Right.
With the more that you do, I'll be watching them, because look, if you pull one thing from everybody that you interview, you're going to be a better trader.
Of course.
And the same thing when we did when we did the COVID event, when we did BCRF event, the two virtual events. Look, you could say you're too good and not show up and not watch, or you could come and see what one takeaway you can pull from everybody. You don't know what they're going to say, and it could be that one little thing that literally changes how you trade from that point forward and makes you a better trader. So
we talk about that with services. We would have this conversation all the time because, I'll just throw out an example. Seeking Alpha Pro, I don't even know if it's still expensive. At one point, it was extremely expensive for what it was. But the logic is that, you pile into one trade that works, you just paid for it for the year. Exactly. So
that's very similar. It's very similar with different services, different things that you could pay for. You look at the price, you're like, who the heck would pay that? But when you think about that one trade per month that you make,
right?
one trade is 10x what you're paying or whatever it may be. Absolutely. And no, I agree. And that's something that I do. And automate some of those things. But it's look, I remember Traders for a Cause in Vegas, and I was sitting next to Greg, and he's eagerly writing down everything we're saying. And
like he does.
Yeah, but he's literally the best trader that I know, probably has more money than everybody in the room combined. And he's taking notes, learning, trying to become better, which is amazing in itself. But at the same time, it's like, that's why he is where he's at, because he's not too proud to learn something new from somebody that's
100%
trading for fun.
The most successful traders that I know, and you would be included in this group, you guys absolutely work your asses off. And anybody who thinks that they don't is pushing a facade. Like the people that make it look easy are not as successful as they claim to be. There's no way. It just doesn't exist. I mean, you could be incredibly lucky, maybe 2 or 3 times, but ultimately it's about hard work.
Right. You can definitely do it for income. You can definitely, get rich. But if you want to build wealth, if you want to continue building wealth, compounding and things like that, it's not something that you can just show up and I've often compared it because I know everybody loves Brady, but do you think he just shows up and wins Super Bowls, right? I mean, if you look at was it Tom? I think it was Tom vs. Time. Have you ever seen that the Facebook series that he had done?
I did not, but I think I know where you're going with this.
Oh, you were too proud because you're from Philly.
Yeah.
You should check it out, and it just goes to show you though that he's literally with his coach, working working this one little kink out of his arm to perfect the throw.
Sure.
And it's like those little tiny changes, just like us changing stop orders or fills or whatever it may be. It's all these little tweaks that will make you great. And most people just want to show up and, play the game or show up and trade.
Sure.
But it's the little tweaks that are going to take you from here to, literally wherever you want to go.
I'm totally with you. So we mentioned in that last bit, Traders for a Cause. So we should probably take the opportunity in the first Traders for a Cause podcast to talk briefly about Traders for a Cause and what it is that we do, where we see it going, and what we're planning for this year. In addition to the podcast, we are looking at a springtime event, which we did last year with the COVID benefit. So we'll probably pick another one and do that in April, and thinking of doing it virtually again, obviously. And I guess it's still up in the air with Vegas, right? Like we're still kind of on the fence, not sure what's going to happen. Leaning virtual.
I think it's going to be hard. I think it's going to be hard for people to commit by June or July. Yes, I'm going.
Right.
So, I think they'll both be virtual, but I can't wait to get together. I can't wait to have, more little get-togethers, whether it's Miami or go skiing one year, all different things. So smaller. I've already been pitched about Puerto Rico with one of my buddies there and saying and all this, a much smaller, close-knit type of event there.
A tropical Traders for a Cause, Puerto Rico. I like the sound of that.
Middle of winter.
God, this winter, man, I'll tell you. If you're in the Northeast, this has not been a fun one at all. But with Vegas, we can't commit at this point. It's going to be tough because we have a lot of contracts to get into and stuff to be able to make that happen. But I do feel that Traders for a Cause has experienced a different kind of growth that we never saw before in 2020. And that's just with, doing these free events that have just raised we've broken all of our fundraising records, reached an entire new audience. My prediction is that people are dying to get together, as you said. My prediction is once we go back to Vegas, I think we're going to blow the doors off of it. I think we're going to maybe even double the attendance that we've had.
Great. It's a blessing in disguise. Granted, it was a horrible thing to happen to the world, but it really opened our eyes to the possibilities and like how we can reach, thousands of, I mean, we might have a couple hundred go out to Vegas, but we literally had tens of thousands, almost 10,000 or whatever, that had signed up for, the other events. So that alone was amazing. And now all those other people know about it.
Absolutely.
And potentially might come out to Vegas. And, a lot of people don't, they get nervous to come out there, meeting other people for the first time. But as you know, I think probably 80% of people end up returning every single year. And then,
absolutely. If
you go.
if they can afford it, I have, I'm not patting myself on the back. You and I have kind of been this has been our brainchild and our project for years now. I have yet to talk to anybody who didn't just absolutely have a blast, that loved everything about it. And I don't think, it certainly takes a lot of planning and organization to make it happen. But I think that truthfully, it's the community of traders that really make it what it is. And it's kind of hard to describe.
You build the bond with people in person that you literally trade with every single day. Or
right.
maybe you don't have that yet.
Right.
And that, I think, was the biggest part. And I'll tell you that some of the people that I was mentioning, unnamed but also named, they all go. And I think that built our relationships better. You get to see these people in person. And it was very important for my own growth. And, if we didn't do that, and I don't just go to ours, if there's other ones, like we went to the Benzinga ones, I used to go to Sykes.
Yeah.
There's just so many different ways to meet different people.
Sure.
That is the way to do it, in my opinion, is just keep on expanding your network.
Absolutely.
And just keep
you and I never would have met if it weren't for Sykes' conference.
I was thinking of something, Alex, that did the interview for us last year for Traders4ACause.
Yeah.
He had mentioned, he just interviewed Mason Riley like last week. And, I was kind of inspired by him. He just, off the cuff donated $250,000 to the Barstool
Fund. Yeah.
Yeah. And I was like, that's an aggressive move. And, it's difficult to find people that are that charitable. And I wanted to hear more about his story. I knew he had been successful and all that kind of stuff, but, he came in through that same, through Sykes, and, back in the day, had found my blog and kind of put me on the map a little bit with his subscribers. I went to one of his things. I met Eric Wood. Eric Wood's my best friend.
Right on.
I always give Tim crap for being a loudmouth, but without his loud mouth, I would have never met Greg, Eric, you.
Right.
You got to remember your roots and where you came from and who made the most noise. But a lot of us in a lot of these relationships are, from either that conference, Traders4ACause, and that's the truth. Meeting these people in person.
Vegas, I will reminisce and wax nostalgic that I remember at the Sykes conference, you and I sitting down. I think we went to some fast food place to grab a quick bite for lunch, and we came up with the idea of doing a charity conference on the back of a napkin. Quite literally, we're just sitting there talking about it. We're like, we've been coming to these things. Let's do something that we can parlay this. Yeah, and make it charitable, and it's been such a crazy ride. I can't believe what we've done.
Maybe we can raffle it off.
I'll dig around for it, but I think we got to wrap it up here. But this is great. I couldn't be happier with how the first Traders4ACause podcast has gone, and hopefully I can get others that are as easy. You're a very easy interview. Hopefully. The rest that I schedule will be as smooth, but I appreciate your time.
No pressure or anything.
No pressure.
And then get asked by Zach next.
Yeah. It helps that I know you so well. Obviously, not only with the way we interact, but the questions they flow easier for me to you.
There's a lot of ways to do this too, and I just have done one with Alex and Phil, which was really fun too. So, maybe we do a couple of us, 3, 4 of us at times.
With a group.
You start to go back and forth, and all of a sudden the conversation takes on, it goes off by itself.
Goes off in a million tangents.
Yeah, you can pull a lot from it. So
I can imagine that happening with Canny. If I get Canny on here.
if you have him on there, you need a little a swear tally.
That's actually a great idea. I'm going to get him and Fami. We're going to get them both on the Traders for a Cause podcast. We'll make it a special episode of their own podcast. A swear off. A swear off. And maybe throw a charity spin on it somehow. That would actually be kind of interesting. Place bets ahead of time.
Well, we just have Greg donate.
There you go. That's how we'll do it. All right. Well, thank you everybody for listening. And Nate, thank you for being here for my first show. You're an incredible human being. I really appreciate it. And I guess I have to think of some clever tagline way to sign off. So maybe we'll just start with something very generic and say, in the meantime, trade, profit, and make a difference. Does that work?
There you go. That sounds like a good slogan or motto.
It's a good idea, right? Real original.
Yeah.
All right, guys.
All right.
Take care.
Thank you.